Westpac CEO Brian Hartzer says more needs to be done to stimulate economic growth from the private sector, yes, but also the government and regulators.
The Big Four bank chief blaming the slump in business, investment and the credit crunch on three key factors: the failed cohesion of Australia's political parties, a lack of trust in the banking sector and the shortcomings of regulatory standards.
I sat down with Westpac CEO Brian Hartzer after his speech at a packed Trans-Tasman Business Circle lunch, and I asked him first what he thought of monetary policy and the threat of negative interest rates.
Well, I think that the first thing to recognise is that the interest rates are a response to an external situation. The situation is a lack of growth and a lack of investment. And so we've been relying on the central banks around the world to pump money in and to keep interest rates low. But the real thing we should be asking ourselves is, why are they having to do that? And that's, I guess, the main thing I was focusing on with my speech.
All right, we'll come to that. But what would happen? I mean, what would happen to the economy?
Well, it puts huge pressure on, at the starting point, for customers who are depositors, retired people who are living off their savings. It's incredibly challenging.
The idea that Phil Lowe might do whatever it takes, you're not concerned about that? I think Phil Cronican recently has made comments along those lines that he is concerned if we get to that space.
Well, I would certainly agree. I'd be concerned because it'd be a sign the economy was weaker than we want it to be.
Right.
For banks, economically it's incredibly challenging, obviously. But that's why I think it's important for us to try to avoid going over that cliff and make sure that we restore some confidence and get people investing again.
Right. OK, let's go to some of these roadblocks in a way. And the way you're speaking now, you're arguing that regulation, we've got to be very careful about what we're creating here. You do acknowledge, though, that banks have been, including Westpac, have been part of the reason we've got this enormous...
Totally get it.
Reaction.
If I had a time machine, I would go back and fix a bunch of things. Absolutely, I would do that. And, we absolutely accept our part in this. I think it's important to remember that the Royal Commission was focused on cases of misconduct that were largely to do with financial planning and so forth. They weren't to do, in the final report does not talk about that much the way core banking is done. Haynes steered clear of a lot of that. So I think it's important not to conflate issues around conduct and the management of operational risk, which are significant and which we need to improve on.
Haynes did touch on responsible lending, though, didn't he? And that's an area where you are actually in court with ASIC. Why did you decide to do that? And where do you think this is going? Well,
we make mistakes, and when we make mistakes, we own up for them, and we'll take the punishment that's coming to us. We absolutely respect the role of the regulator, and they have their views on this. If we go to court, it's because we disagree. And in this one, we disagree with the interpretation of what the law requires, and it's with the judge, and we'll see where we get to. The broader point I'm making, and there's a number of regulators in this responsible lending space. There are other responsible lending laws, and ASIC has its obligations around enforcement of the law. You also have APRA taking a view on what you need to do when you make a credit decision. You've got AFCA, who's got their own view when they look at a complaint as to how it should be handled. So you've got a number of regulators who are approaching things from a particular stance, which we absolutely respect. But if we're not careful, the unintended consequences of that...
And that's because of an overprescription not allowing you to be the judge of credit quality.
Yeah, I do think that's the creeping thing that really concerns me. I mean, it's not a perfect analogy, but in any sport, you've got to have rules, you've got to have boundaries, you've got to have a referee who's calling fouls. But you don't necessarily want the referee to say, no, don't stand there, you should stand over there. That's the sort of thing where I think there starts to be a gray area about what is the role of the regulator and what's the role of the bank to decide to take a risk and where the consequences if it goes wrong.
OK. Brian, you also, just on the serviceability rates, looking at the property market, interestingly, you moved ahead of APRA, led to reports that, Westpac was going rogue, releasing the handbrake on residential property lending. Again, why did you decide to go ahead of the regulator there?
That was not our finest hour. We respect the role of the regulator, and that shouldn't have happened in that timing. It's the short answer. I think we knew where it was going, and so a decision was made to, get out there. But frankly, that wasn't particularly well thought.
So it does reflect, I guess, this keenness to look at the mortgage market. Do you think there's going to be even more competition going for growth in the mortgage market between the players?
There's certainly plenty of competition. There's a lot of competition. You're seeing that in pressure on margins. But partly that's because the demand is low. And so obviously as a major bank, we have to trade off volume and margin all the time. And right now you've got a relatively small pie of demand and a lot of lenders fighting for share.
What about this APRA capability review, Brian, that Graham Samuel chaired? And what about executive accountability now? The EY analysis around CEO bonuses, for example, is suggesting that bonuses will be slashed in half under these proposed changes, capping the contribution of financial metrics to bonuses at 50%. What's that likely to do?
I don't want to prejudge that. I mean, it's the role of the board to decide on the structure of pay, and obviously we're in consultation with our shareholders, and we'll be very interested in what APRA's views are on that, and obviously they're the regulator, they can prescribe things. As a general statement, what I would say is just two perhaps reasonably obvious things, which is that I've seen plenty of examples of companies where if you don't have the right leadership, things go off the rails. So big companies like Westpac, we need to be able to attract and retain world-class people.
Well, again, there have been suggestions that on the investor side, boards are now struggling with the regulators on the one hand and investors actually concerned about this level of prescription.
Well, yeah, we certainly do see some level of debate around that. I just think we need to be able to attract people. And the other thing I would say, though, is we have always set out to make sure there was an appropriate balance and appropriate consequences in our remuneration structures. So we have deferral, we have balanced scorecards, we have an ability to make judgmental overlays. I think all that's there, and that includes lots of non-financial measures as well. I think it's perfectly valid debate. I do think, though, that in the end it should be up to the boards of companies to decide what they think is in the best long-term interest of the shareholders.
You've done your own report into governance, which you made public. Now, the regulator has imposed $500 million, I think, on both you and ANZ. I want to ask you, in addition to that, though, about the Reserve Bank of New Zealand. You mentioned it in your speech. How much of a reaction are we going to get from the big Australian, New Zealand banks on this?
There's a lot in that question. I mean, there's sort of two different things going on there. I think, in the end, companies are commercial organizations, banks are commercial organizations. They need to make choices about where they put their capital, what returns they want to. You talk about a bank's retreat. Could we see a scenario where one of the big four banks could actually pull out of New Zealand? I wouldn't want to speculate on that. I just think that there is a reality. In the end, companies make choices about where they put their capital. And if you dramatically increase the amount and you make it very difficult for people to earn a return, then obviously companies are going to think about how much exposure they have. But hopefully we won't go there. There's a consultation period underway, and let's see where it lands. Finally, from me, you've been obviously CEO of Westpac. You've been CEO of ANZ Australia as well. Being a bank leader, 8-10 years ago, how's it different being a bank leader now? I think I don't know that I have any blinding insight for you, other than obviously the level of attention in the public sphere on the way that we go about doing what we do is incredibly heightened. And the experience of the last couple of years has been very, very difficult. I guess part of the reason I paused is I was in the UK for a couple of years right after the financial crisis, and I lived through the same sort of experience at RBS. So in my life, I've kind of been living this for the last decade, one way or another, and I guess I'm kind of used to it. But I'm looking forward to us getting through this, cleaning up the things we need to clean up, lifting the standards, getting to the point where people are much more interested in talking about the latest capability we're delivering to customers and how we're helping customers grow their business than obsessing about, what's the next lawsuit we're going to be dealing with.